In this video, we're going to be performing a deep dive on Lancaster Colony Corp's dividend safety. To begin, let's talk about Lancaster Colony Corp's business model. Lancaster Colony has been making food products since 1969 after shifting away from housewares. The move has afforded the company some meaningful growth in the past 5 decades, and the stock sports a $4.2 billion market capitalization today on $1.3 billion in annual revenue. Lancaster Colony makes various meal accessories like croutons and bread products in frozen and non-frozen categories. Lancaster Colony Corp is a well-known dividend stock because of its compelling track record of dividend growth. With 55 years of consecutive dividend increases, Lancaster Colony Corp is a member of the Dividend Aristocrats Index, a group of elite dividend stocks with more than 25 years of consecutive dividend increases. In fact, Lancaster Colony Corp's dividend history satisfies the requirement to be a dividend aristocrat more than twice over. With more than 5 decades of consecutive dividend increases, Lancaster Colony Corp is a member of the Dividend Kings, a group of even more exclusive stocks with 50-plus years of dividend increases. Looking ahead, investors cannot rely on Lancaster Colony's dividend history alone as a measure of its dividend safety. For the remainder of this video, we will discuss the company's current dividend safety from 4 perspectives. 1. Its dividend safety in the context of its current earnings. 2. Its dividend safety in the context of its current free cash flow. 3. Its dividend safety in the context of its recession performance. 4. Its dividend safety in the context of its current debt load. First, let's discuss Lancaster Colony Corp's dividend safety in the context of the company's current earnings. When Lancaster Colony Corp announced its second quarter financial results on January 31st, the company reported that it generated earnings per share of $5.33 over the past 4 quarters. For context, Lancaster Colony Corp paid $2.45 of common share dividends during the same time period, for a dividend payout ratio of 46%. Using earnings, Lancaster Colony Corp's dividend appears very safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare Lancaster Colony Corp's current dividend payment to its free cash flow. Over the past 4 quarters, Lancaster Colony Corp generated $163 million of cash from operating activities and spent $32 million on capital expenditures for free cash flow of $130 million. The company distributed $67 million of common share dividends during the same time period for a free cash flow dividend payout ratio of 52%. Using free cash flow, our conclusion is the same as when we used earnings to measure Lancaster Colony Corp's dividend safety. The company's dividend appears safe for the foreseeable future. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. Accordingly, this section will analyze Lancaster Colony Corp's current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by measuring its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Lancaster Colony Corp's performance during this time period is shown here. Lancaster Colony Corp's earnings per share declined by 19% peak to trough during the last recession. More importantly, the company's earnings continued to cover its dividend, and it continued its multi-decade streak of consecutive dividend increases. Accordingly, we have no concerns about the company's ability to pay rising dividends during future economic downturns. The last angle we will use to assess Lancaster Colony Corp's current dividend safety is by looking at the company's current debt level. More specifically, we will see how much the company's weighted average interest rate will need to increase before the company's free cash flow will no longer cover its dividend payment. Lancaster Colony Corp has no debt. Accordingly, we believe that Lancaster Colony Corp's debt level will not impact the safety of its dividend moving forward. Thank you for watching today's video, which performed a deep dive on Lancaster Colony Corp's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.